All right, let's dive into the discovery process and how you can move the transaction forward from the discovery process to a signed engagement letter, and you begin working on the account and you take them on as a client. So again, the sale happens and begins prior to you even getting on the phone with the person. So what I am always going to do is send over a deck, make sure that they see the website. And then what I'm going to do is my own pre-call preparation is take a look at their email thread. So you're going to go into, whatever source the person came from, right? We don't have that one there. Let's look it over here. Sometimes it can get finicky. You either click on that link that you set up with the automation, or you would just take their email address. You'd pop that into SmartLead. You'd take a look at the email thread. Sometimes they would have sent over a deck. Sometimes they would have, given you some piece of information that's going to be relevant for the conversation. And you don't want to, be in the dark to anything that has been previously discussed. Once you've looked at the email thread, what I do is I go to PitchBook and I type in the company name, right? So this is a client of mine. We can take a look at this. PitchBook is going to give you a snapshot of the company. The information isn't always going to be 100% current, but it's going to be enough for you to get a general understanding of what they do, where they're at, what the previous raise targets were, if they completed those deals, what the valuation was. You can get the general description. You can look at the website, the what industry verticals they're in. You can take a look at the bios and the profiles of the different management team, and also you can take a look at any of the comparables, right? You can take a look at any existing investors, who they have on their cap table right now. This is all going to be very relevant information for you to have as you're going into the discovery process, right? Obviously, the next thing is you take a look at the website. You just need to make sure you understand what they do, okay? Now, how do you begin the call? So you begin the call by stating what you do at a very high level, and then you want to quickly transition into the fact that you've already done some preliminary due diligence on the call, or on the company. You'd love to hear the story from them, and then from there you get them to start talking about the company, and then you go into relevant discovery based off of what they're saying to fill in the gaps. Now, you're primarily looking to identify these 5 things. What's the stage? Okay. What's the revenues, profitability? What the deal is, right? What they're looking to raise, what the deal structure looks like, what the current efforts are regarding their raise, and then the main point of differentiation of the company. So once you have conducted your discovery, you're then going to move on to your presentation. Now, in terms of the discovery, you have a full set of questions that you can use to conduct the discovery. Now, if you were to go through every single one of these questions, the call would be an hour, maybe 90 minutes. So you're not looking to go through all of those just yet. You definitely need answers to all these questions, but you can take care of that during the onboarding process. So again, at the initial stage, you're really just trying to identify these 5 things, and you're trying to see what tier of client are they fitting into. Are they a tier 1, a tier 2, or a tier 3? And from there, you can gauge, what the engagement terms are going to look like based off the information you get from them in the discovery. So once you have a good understanding, you are clear on these 5 things, you're then going to move into the presentation. So I have taken this presentation directly from transcripts of my calls. So this is almost verbatim what I'll say. You want to say, just a few sentences about the track record of the company, the people you have on the team, what you focus on. Okay. Once you have done that, you then transition into what the specific kind of engagement would look like for their deal. So what do I mean by this? This is where your expertise and your demonstration of competency comes into play. So if we're taking the example of Drisha, and Drisha does, they do essentially they create language models for oil and gas companies to operate their facilities. So they take all the schematics, blueprints, and manuals that operate the facilities, and they put that into a language model so the engineers on the field can just ask that model questions and get to a solution for whatever they're trying to do in a few minutes, as opposed to them taking a few hours looking through everything, right? So that's what they do. So as I'm getting all that information out of them during the discovery, I say, listen, so based on what we've discussed here today, I think specifically for you, what we would be focusing on is going after the corporate venture arms, different oil and gas companies in North America. We could potentially even look at Europe. And then over and above that, we have a very strong network of family offices and high net worths. And I think given the stage of the company, you probably don't want to be looking at any VCs at the time being. Not only do I think the diligence process will be a little bit longer than what we're looking to do here, I also think that the stage you're at right now, you're not going to be getting the most favorable terms from them. So focusing on the family offices, focusing on the high net worths and angels, I think is going to be our best bet. So that's where the focus is going to be. In terms of the way that the strategy and process works, what we're going to initially do is obviously take a look at all of the material that you have. We want to ensure that the data room is, up to 100% standard. We don't want any deal or potential transaction to get hung up just on, you maybe not having the exact financial model that they're looking for, right? So we're initially going to look at all of the materials you have. If there's anything that's missing based off our experience, we will advise you on how to put that material together. We could also build the material for you. That's something that we can do on our end. Once we have all of that information, the whole package intact, and we've created a great story, we're then going to start going to all the groups that we have within our network that we've either done a deal with that's similar to yours, or the ones that we know have a mandate for AI companies in oil and gas, anything within sort of, deep tech, that sort of flavor is where we're going to be approaching first. Okay. We are going to look to bring between 10 to 20 names to the conversation. We're always going to conduct the first few meetings. We don't want to be wasting your time. So we will take initial conversations. We will have them do their pre-diligence before meeting with you, so they come to the conversation with some intelligent questions. And then what we're looking to do from there is sort of put 5 to 10 names in contention and create a bidding war for you to get the most favorable terms. In terms of the way that we operate, we obviously are going to take a success fee. I'd like to have a conversation with my team to come to terms that make sense for us based off of this specific, proposed engagement, but also what's going to make sense for you. So success fees generally range between 4 and 7%. We would like to negotiate some warrants in addition to that. And we also have a work fee. The work fee is going to be between 10 to 15K upfront. And that's going to enable us to take care of all the compliance, put any personnel on the file that would be necessary to build out any of the materials that we might need to build out. And really just make sure that we cover off on hard costs so we can get to this as quickly as possible. I'd like to have a conversation with my team, and then we can meet. I'll send over that information. Boom, 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 boom. So listen, I went on a huge spiel there. I would be doing this as very conversationally. I don't want to be speaking for 5-6 minutes without them talking. You lose your frame by doing that. So you want to be kind of piecing that together so they get the full story. Ideally, they're going to ask you what the engagement terms look like, right? And then from there, you say, listen, we work on an upfront basis. We have warrants, we have success fees, blah 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 blah. But you don't want to be specific with anything. You want to leave it vague and high level, because to transition, you're going to say, we are going to go back as a team. We're going to come up with specific engagement terms. We're going to email those engagement terms over to you. You're going to review those with your team. And that's going to be the foundation of the next conversation, which we're going to book in right now. It's Thursday right now. How does Monday sound at the same time, right? You always book it 2 days ahead or 3 days ahead. If it's a Thursday, you book it for Monday, right? If it's Friday, book it for Tuesday. Okay. That's what the process is. Now, the other thing is this: as you are going through the discovery process, as you are going through your presentation, you are trying to weave in recent transactions. So this is why it was so imperative, and why we covered at the very beginning, you going out and getting advisors. And the main reason why you're doing that is so you can speak to their previous engagements and their recent success stories, because you are going to be going through your deal origination process through the prism of, who do I have in my network that I'm going to be able to get a deal done with quickly? What's their focus area? So if you do that correctly, and you're going after AI companies or oil and gas companies, and you have guys on your advisory board or on your team that do deals in that space, and you know what those deals are, you then speak to those deals as you're going through the presentation, right? So for Drishya, Dominic, who's my partner, 36 years investment banking experience, billions of dollars transactions, primary focus in oil and gas. We know all of the oil and gas focused family offices in Canada and the States. We know every single private equity firm that has a focus in oil and gas, and we have a plethora of individual investors, high net worths that we've done deals within this space, right? And then you speak to specific transactions, right? Most recently, we did a transaction called Renegade. We did a $50 million financing for them. They were an early stage company in downstream oil and gas. They were building refineries, blah, 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 right? So you want to be speaking to those engagements. Okay, what do you do thereafter, right? You set the next call. So you're going to make sure that you get a deck. If you can, get a data room. If you need to sign an NDA, sign the NDA. And then you're going to take all the notes, track everything in the CRM, and you just want to make sure that you're very organized and meticulous with everything. You don't want anything to get lost in communication here. So you booked that next meeting, you've taken the call recording, boom, 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 you have everything in place. What do you do thereafter? So this really comes down to how you are positioning or how you are going to approach the engagements. Realistically, if you're going to be taking more of a meticulous approach where you are going to be doing diligence on the company, then obviously you go and look through all the material with your advisors, with your team, and you make sure this is a deal that you actually want to get done, okay? And you figure out where they are in the process of creating the story. So oftentimes, if you're going to be speaking to earlier stage companies, they won't know shit. They won't have their financials together. They won't have their deck together. They won't have any of the material together. So that gives you the ability to come to them with a strategic advisory engagement to precede the growth equity raise or the debt raise or whatever it is. If they don't have a data room in place, you say, listen, we're going to do strategic advisory. I think that the story is incomplete currently. There's some materials we need to put together because as it stands, if we bring this to our network, I don't think we're going to get the success that we're looking for. So what I propose is we put together, a package of say $10,000. We're going to redo your deck. We're going to put your pro formas, your historical financials together. We'll get those audited. We'll do a white paper, blah, 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 right? And how do you get that done? You can go and hire business students. You can go and hire bankers on Upwork to do that material. You can come to me, right? I've got people in my network that can get that stuff done. But point is, if you're going to be taking a more diligent approach, then you want to do some diligence on the company before that next call, and then you come to them with the terms. How do you approach them with terms? It's very simple. You literally just send them over an email with what those terms are going to look like. You want to be touching on what the upfront looks like. You want to be touching on who you are going to be going after, what the strategy looks like based off of what you discussed in your presentation, right? Based off what you discussed in the presentation. You want to be talking about warrants if you're going to be buying some of the company and getting some shares, all right? And then obviously what that success fee is going to look like. You can take a look here. You can use this. Here's another example. This was the one that we did for Drishya, right? So 7% in warrants at the seed price, right? So not what the price of the financing was, but what the management team bought their stock at, which means well, when we end up doing this, because we're still in the midst of this raise, but we'll own 7% of the company for like 50 grand, right? Because we're going to buy it at this seed financing round. 5% success fee, 10% work fee, 3-month engagement. Okay. What's another one? This is one of the guys that we had to stick to our guns with. We're getting a little bit ahead of ourselves on this one. I'm going to come back to this, but this is essentially what you would send out, right? And you send this out before the next call. Caveat to that is this: if you haven't gotten clear on what everything looks like, if you haven't gotten a clear understanding of the company on the first call, or maybe the guy likes to talk too much and you're not getting all the information you need, then the next call is just a continuation of the discovery, right? This is assuming you have gotten everything you need out of that first call. Okay. That goes without saying. You guys are going to, you guys are going to be fine with that. Now, where do you go from there, right? You have the next call. So the next call is simply you discussing what these engagement terms are going to look like. Sometimes you're going to come to an agreement together over email. Oftentimes that's the case. But generally, that next call is for you to go over what those terms are and for you to come to an agreement. Sometimes it's going to take a few calls. Sometimes they're going to need to bring in the CFO. They'll need to bring in, if you're speaking to, one of the lower level management, they need to bring in the CEO, right? There's going to be a few moving pieces here that you need to be able to corral and herd, and that's where your communication skills come into play. And all of the stuff we talked about during the first section, right? Now, what happens if they agree to the terms, but they come back to you with an agreement that they put together? And that's what we're going to go into next. So this is, I'm not going to show you this, but these guys were like, we're not doing it up front. We're going to give you these terms. This is what it is. And we're like, listen, you don't have a story. No one understands what you're saying. You have a great team, a great potential here. But as it stands, no one's going to do anything. You haven't been going to, you haven't been taking this to any professional investors. You're only going after people in your network. And, candidly, if we brought this deal to anyone we knew, they would laugh at us because you can't even articulate what the deal is. So no, you are going to pay us because we have to put the story together and we have to sell this thing, right? It's not going to be just us, going and getting some intros. You're not getting the deal done. And I don't care about the 30K or the 50K or whatever it was. I care about making the few million on the back end and getting my warrants. So they were like, okay, yeah, that seems fair. We'll go over with the lawyer and put an agreement together. And then they send us back this agreement, and it's 2 pages, and they leave out a bunch of stuff. They put in a bunch of covenants that are disadvantageous. So what does that lead us next to? Is engaging a lawyer. So from the onset, you should have a lawyer earmarked. You don't necessarily want to pay the retainer just yet. You don't necessarily need to pay the retainer of the lawyer, but you should have one earmarked. And you don't want to be using them for everything, but in specific instances like this, you definitely want a lawyer to be looking over these agreements because, your clients sometimes will want to fuck you. You need to make sure that you're protected. So you don't capitulate, don't give in, stand firm, right? You are equipped with the tools in order to make these companies tons of money, increase their valuation, give them the cash that they need in order to grow their business or fund whatever venture they have. You have what they need. You have the power in the relationship. And more importantly, there are hundreds of other companies lined up right behind them to take their place should they not want to fall in line. So you need to stay firm. You need to stay firm in how you approach these relationships. Otherwise, they will try to walk on you because they think unless you haven't done your job or unless if you don't do your job properly of maintaining your frame and showing the status that you have, right, and creating that status delta, then they're going to think that they can do this stuff to you. That's why you need to ensure that you come in as the expert, as the advisor with the golden key to everything that they need. All right. So you go through the series of calls, you come up with the terms, make sure that those are agreed to. You send over the agreement. You then walk through and negotiate any additional red-lined items that are necessary. You send over an invoice. Make sure that you send wires. Don't do credit cards. First of all, if you're sending credit card invoices that can be paid via credit card, you're not charging enough. All right. So make sure everything's in a wire. The other thing is you don't want to be caught up in any issues with your processor, holding your money, which happens all the time. So, listen, there's going to be a ton of different calls for you to watch. We've gone through the process. That's all it is. That's the process. It's mostly you making sure that you are showing that you are someone who is confident, capable, and someone who's going to be able to get the transaction done. You showing them and making them feel that you are the guy. That is what does most of the selling. And you creating that delta. But to follow the framework, that's all the framework. That's what it is. It's right here. And if you watch all the calls, you're going to see that there's similarity between every single one of them. We all follow this process, regardless of who it is. Now, we have flexibility in the process, though. We have maneuverability. We aren't rigid. If the person is a very type A, straight to the point, direct kind of guy, and he immediately comes in firing, you match that. You're not going to start asking him a bunch of questions about the company if he's being very direct. Okay, listen, how do you work? Give me the information that I need. Because listen, guys that are like that, those are fast buyers. Those are guys that'll make decisions quickly. So you don't want to be rigid in how you approach this process because you're going to it's like a dance, right? You need to be able to match whatever energy that they're bringing to the table while maintaining your frame, right? But for the most part, every single call that we go through will follow this process to a T, but sometimes the order of the pieces will be changed. The order of the process will be changed. So the next thing that you need to do is go through every single one of those call recordings, take notes, see what the similarities are, and see how you can match this process to your own style. And then, of course, at the end of the day, the most important thing is you just start getting on the phone and repping it out. That is, at the end of the day, how you're going to learn. But create that feedback loop, though. That's why you want to record the calls, create the feedback loop, match our closings to your calls. And if you're not seeing a deal close within 2 to 3 weeks, well, there's a process issue. So that's what you have to audit when you are starting to take your calls. So we'll move on to the next video.